Sierra Metals, profitable precious and base metal productions, 3 mines from Mexico and Peru. Mike, Sierra Metals, you are a mid-tier producer of base and precious metals, and I think 2017 was so far a very good year. Can you elaborate a bit?
2017 has been a good year for us. We've come off of a very positive restructuring program at Bulevar, and now we're embarked on a similar operational improvement program in Mexico. We've actually have a very solid cash position at the moment, 31 million in cash, about 45 million in total liquidity. We've also seen our debt come down this year. We've paid down about 10 million in debt, and we'll pay another 10 to 15 million in the latter part of the year. So overall, we have a very favorable net debt position, and things are going quite well for the company.
Great, perfect. So that sounds like you have done your homework, and I think you are also doing a lot exploration, meaning not like exploration. Hopefully you find something, meaning you know where to drill. We call it brownfield exploration, of course, and you do it underground. Maybe can you give us an idea of what you have done, because I think the numbers are quite impressive, and what you are planning also. Yeah.
So we're spending about $20 million this year to drill 83,000 meters, and we've actually completed that program for 2017. And what that gave us is 3 technical reports, a new update, a resource already released for the Okocha mine, which saw a 68% increase in our measured resource and a 77% increase in our inferred resource at the Okocha mine, as well as an increase in our metals. And so what we're going to have now coming is a reserve update for the Okocha mine, which will happen probably towards the end of this month. As well, we'll also have updated resource updates giving us increased measured and indicated resources and inferred for both Bulevar and QC, which will come towards the end of November, early December. So and we've had good success. We put out several press releases giving the results of some of these drill programs, and we've seen increases to grades and increased width. So the programs have been very successful, and we're quite happy.
Fantastic. And I also saw here that you are planning 330,000 meters for 2018 to 2022. I mean, that's really massive, I would call it. And as you are profitable, you finance that easily from cash flow, right?
A good part of that will be financed from cash flow. So we're doubling next year to expand out the existing zones and to chase a couple of brand new targets that we have. And then longer term will be it'll be brownfield and some regional exploration in that number. But yeah, a good part of that will be financed through cash flow.
Fantastic. So that means that you are really working on the future of all 3 mines. And I would say let's dive into your first mine, your most important mine, Okocha. Maybe you can give us a short overview of the mine, please.
Yeah, so Okocha is a polymetallic mine. We're producing closer to about 2,900 tons per day right now. We'll be at about 3,000 tons by the end of the year. Definitely this is one we've seen significant exploration success at. We've had 3 new zones. We had Escondida, we had Esperanza, and we've had Cuya Mascota, which are new discoveries, which are helping to fund or to provide increased net smelter royalty or better cash per ton production. And so we're quite excited about that. And what we're going to be doing, and we've already started to do based on the back of the resource report, is some internal scoping studies. And we're going to be going to engineering and feasibility here to look at potential expansion of this mine. And so by next summer, we'll have a better idea of what we're going to be expanding the mine to. But right now, we produced about 7 million ounces of silver equivalent there last year. We've seen our costs come down from $13 all-in sustaining last year to about $10.60 per silver equivalent ounce at the Okocha.
Wow, fantastic. And let's move on to the Bulevar copper mine. Honestly, yeah, well, it is copper, of course. Copper is hot, as we saw today. I think $3.22 was this morning in London paid per pound of copper. That's fantastic for you guys. Maybe you can give us also an idea here, because you produced over 21 million pounds, right, so far?
Yes, 21 million pounds of copper last year. We'll probably do a similar number, maybe a little bit less this year because of the restructuring work that we've been doing. However, we have managed to increase our recoveries at Bulevar up to from around the 74 up to around the 82% level. So that's going to help definitely in terms of the metals produced. And also with the work that we've been doing there, we've actually been able to raise the average grade from about 1% copper equivalent, which we're mining at the El Gallo inferior area, up to about 2.55% copper equivalent now in the Bulevar West and Norwest areas. Now those will take a couple of years to come into the production schedule, probably later 2019. So what we're focused on right now is ramping up production and pushing tons through the mill, which has expansion capacity already there with very little capex requirement. But at the same time, that'll help us to reduce our costs even further, and having increased recoveries at the mill will help us to increase production.
Yeah, as it is stated here, 2,500 tons per day. I think you're already above that.
Yeah,
what do you think is possible in the future without, let's say, a large additional capex? And where do you want to be, let's say, if you have to invest another, whatever, 20, 30, 40 million?
Yeah, so right now the mill has the capacity probably to go up to about 4,000 tons per day with very little additional capex. You know, we've added 13 new pieces of equipment, and that's what we needed, is more equipment availability to be able to take more tons out of the mine. And so we've added the 13 new pieces of equipment. In terms of increasing the mill to say 5,000 tons per day, we'd probably need, I'd say, around 40 million of capex just
decent.
For further crushing and some you know, further flotation circuits and some work on tailings.
Yeah, okay, fantastic. Your third mine, the QC Silver Mine, I would call it, it was your baby. Now the baby is really growing up, getting larger and better. Maybe you can elaborate on that also a little bit, because I think you want to grow that mine significantly.
Yeah, QC always has been the baby of the family, but we've had a significant new silver discovery there called Santa Rosa de Lima. And what we're finding is much wider widths and better grades. So we're going from mining around below 200 grams silver to about 300 grams of silver, and all in equivalent, including the other metals, silver equivalent of about 372 grams, and average widths now of 4 meters. And so the vein, the Santa Rosa de Lima vein, is much more consistent. We're able to move to long hole mining here, which is much cheaper. So we're actually going to be putting that resource update out probably in, I would say, late November. And what that's going to provide us is we're actually already ramping down to the zone. We've started to develop the stopes, and we're campaigning development ore from that area into the mill. So probably by the end of the first quarter next year, we'll be producing at 650 tons per day from QC, and all that ore will be coming from the new Santa Rosa de Lima zone.
Wow, fantastic. And maybe you can elaborate also, as you said already, the Santa Rosa de Lima zone. Where do you see, in addition from, let's say, that whole zone, from that fault for the future? What do you think is possible?
Well, the QC fault runs for 64 kilometers regionally, and there's multiple mines on that fault. 12 kilometers of that run on our property. We've defined an area now. The original program was 700 meters. Through step-out drilling, we've now extended that to 1.7 kilometers of strike. And so, you know, there's opportunity to extend that much further. Not to say that every single area was going to hit, but
of course,
definitely the opportunity exists to expand that much larger than what it is today.
Yeah, fantastic. So that means altogether for the future, you have really a lot to go. And finally, my final question, what is your revenue mix? What is the metal mix? And will it stay like this over all three mines, or do you see slight changes for the future?
I think in the very short term, it's going to look like it does now. Primarily, we're going to produce mostly base metals. A lot of zinc, a lot of lead, copper are our three biggest metals. Once QC comes online, and once we see an expansion there, obviously we're going to see a significant bump to the silver production as well. But in the shorter term, I think the base metal production is still going to remain very strong, particularly zinc and copper.
Fantastic. Great. Mike, thank you very much for this update. All the best. And we look forward to hear some more good news and to the expansion of all the mines.
Thank you.
Thank you. Ladies and gentlemen, that was Mike McAllister, the Senior Vice President of Sierra Metals. And you heard it, the company is well underway. They are fully on track to expand all three mines, to build it up, to grow QC as it was the little baby, to now grow up the mine. And I would put it that way, over the next, let's say, 1 or 2 years, they have easily the chance to put the production at least 50% higher. And the company is making money. That's always important. $31 million in the bank, and having a heavy good cash flow for this year, probably between $80 and $90 million and in the EBITDA. And so I would say check out the company. I'm your host, Jochen Steiger, in partnership with Dukascopy TV. Thanks for watching us, and bye-bye from Geneva.